So what's the thinking here?
I think what we're seeing in Treasury yields is really what we saw happen last year with the equity markets rebounding strongly. The bond markets were a little more cautious, not so sure of the sustainability of the rally. And now we're seeing that being, priced into the market. We have the risk of reflation coming back in, particularly in the commodity space. We've seen commodity prices rise quite significantly. So, we expect inflation to continue to go up. We're probably not going to hit that 2% Fed target anytime soon. It's going to be a slow and gradual rise, but there continues to be excess capacity in the economy, and as economic activity picks back up, we think this is pretty normal behavior for markets.
So I'm just going to get you to our MLive a question of the day. This is for our markets blog, and the question reads like this: can commodities rally while stocks lag?
I think that can happen. It's not either or necessarily. Commodities have been rallying hard. The market seems to just now be paying attention to this. At Eastspring, we picked up on this last year. Things, very cyclical commodities. We're looking at copper, for example, made a very, very strong rebound in 2020. And while that was picking up, we also saw gold, which is more of a defensive type of commodity. That was also rallying at the same time. So that was a very unusual circumstance. So things aren't so binary. We still are very bullish on equities, even in this environment. There's going to be a shakeout, no doubt. The things that have been winning, the stay-at-home names, internet, et cetera, we've already seen that sort of fall off a bit, and some of the more cyclical areas of the market, namely energy, making a stronger recovery. So I do think that we're able to see a strong equity market, maybe with a different leadership pattern than we've seen in the past, but equities should continue to plug along just fine, especially with the big easy policies that we have supporting economies with the COVID vaccine.
Speaking about energy, Sarah, I just want to jump in here. Oil, big week this week, also a big month with oil above $30 a barrel. Can energy stocks continue to rally? What will it take? Will that be dependent on where the US dollar is headed as well?
So at Eastspring, we're actually quite constructive on energy. The oil stocks, the energy space sold off really hard. A lot of this with COVID and just a general economic slowdown, but also with regards to concerns among the investment community around ESG issues and renewables and sustainability and so forth. So we've done a lot of work on the energy space and think that the next couple of years look pretty positive. There's still a mismatch between supply and demand, and that will continue to drive energy stocks, and also those companies that are getting into the renewable space, into clean tech, clean energy. That's really the next frontier, and we've seen very, very strong leadership out of China in particular on this dimension, and are finding interesting ideas in that space.
Sarah, you also overweight emerging market equities versus the U.S. Why is that? I mean, when you take a look at the U.S. recovery, it is coming out stronger than most people anticipated. And when you take a look at China, there's signs that growth could be plateauing, and that could impact the other emerging markets as well.
Yeah, that's right. We've recently gone overweight emerging market equities, really as a relative call versus the U.S. U.S. markets have been growing above trend. The momentum has been strong. Sentiment has been strong. And the U.S. has got a lot of sort of tailwinds behind it. It's really more of a catch-up story. We think emerging markets that lagged, particularly in Southeast Asia last year, China, Taiwan, Korea, et cetera, have been very strong because of tech. We do think there will be more of a catch-up in emerging markets, and that, in fact, the superior growth that we saw in the U.S. previously is not that much more superior. In fact, it's pretty much leveled off with what we're seeing in the rest of the world. So that's what's allowed us to become more bullish on emerging markets versus U.S. equities.
Sarah, I'm going to just get your view of Bitcoin now and whether it actually is part of any of your portfolios. And I ask this because it's quite prescient. We had Elon Musk just in a moment talking about that Tesla move, of course, to buy $1.5 billion worth of Bitcoin, saying he's just been tweeting saying that Tesla's action is not directly reflective of my opinion, and saying having some Bitcoin is simply a less dumb form of liquidity than cash, and it's adventurous enough to an S&P 500 company. How does that fit into how you think about Bitcoin as well?
So at Eastspring, we haven't been introducing Bitcoin into our client portfolios. That's not to say we don't think about it. I think you have to and look at it and the technology behind it. We have investments in companies that are involved in the supply chain of Bitcoin and cryptocurrencies and so forth, but we don't have a discrete allocation